All right, so the structure of this market at this point on is a trading range. You guys can see that there is no big momentum down or no big momentum up. We're basically swinging down, up, and overall this is representing a trading range. So what I have to do, I need to identify the key levels, the lows for the day. So I'm just going to copy it, and also I'm going to identify the highs of the day, even though it's most likely not going to come into play right now. But if I want to stay ahead and on top of my game, I need to have a clear understanding of what the structure is. Now I can see that we have a short notion working higher. There was a break and price created a new extreme. So according to trendline rules, after price creates a new extreme, I expect correction or straight up reversal. Now I can also take a look at the price action and see this as a one move, one leg, gonna copy it, and this is a second leg working higher. Now, since this is a trading range structure, I'm leaning towards my short-term trend lines. There's a possibility for you to either look for a wider channel like this, or to potentially look for a wider channel like this. Now, this wouldn't be wrong if the structure was a stronger bullish uptrend, but since this is a plain trading range, we're coming from the bottom and we have a two-legged move up, and there are short-term trend lines that are playing out. I'm not really going to look for bigger patterns. I'm just going to treat it as a break and a new high. And right now I have a strong push below EMA confirming my initial analysis. So right now I'm expecting to get short entries. You guys can see I have a new high, first entry long, and it's just a lower high. But this is not good enough short for me to sell just yet. What I'm going to do, I'm going to draw my shortened trend line. I'm going to at first make it tight like this. But as I see price pushing stronger down like this is forcing me to reevaluate my initial analysis, because the way we draw shortened trend lines, if I'm drawing the trend line tight like this, that means that I expect for this downtrend to be just a correction and to be part of a bigger uptrend. But there is no bigger uptrend. We are in a range. And for that reason, this downtrend is a trend on its own. So what I need to do at this point on, I need to make the trend line wider. I'm just going to use this swing right here, copy it, move it at the bottom, and this fits price action much better because uptrend played out with a break a new high, and in range structure, this is a brand new trend on its own. So we have price working higher. Notice we have a failed second entry long, but it's miles away from EMA. So I cannot take this entry just yet. Price created new low, first entry short, second entry short, but I cannot go short below bullish bar so far away from exponential moving average. Notice what happened. Price formed a double trap, but this is right spot on around the market open. And when I'm watching market open, I'm sitting on my hands patiently because there's a spike in volatility, a lot of fake out traps, and this is spot on during the market open, so it is better to be patient here and not take any entry. You guys can see price keeps pushing higher above EMA. At this point on, I have my downtrend still in play, so I expect, according to trendline rules, to get new extreme. Okay, and look what we had. We have a push above EMA. At this point, I'm just waiting. I'm not really sure what the price action is doing, and this is still around the open, so I'm just waiting. And notice what we had. We have a push below EMA and we have a lower high. So on a larger pattern, we have a first leg, pullback, second leg. Now this is a two-legged pullback visually on a larger pattern. If you go higher tick chart, higher time frame, you would see first leg, first entry short, pullback, second entry short. So this is what I mean. This is a larger visual two-legged pullback, priced broke high, instantly reversed down, and this is a lower high confirmation of this a two-legged pullback. At this point on, when I was watching this, I was still respecting the open, so I was still sitting patiently, and overall EMA got a little bit flat. But this is not a bad short take according to our rules. The lower high confirmed the visual two-legged pullback, and downtrend still need new extreme. I'm not even thinking about buying at this point on. All right, notice price is pushing lower. I'm just still sitting patient, and notice what we have. This low is right now lower than this. So the new low for the downtrend has been created. And at this point on, I cannot take any short. Even though we had a second entry short right here that barely worked for a scalp, I'm just sitting patiently and I'm not taking this trade right here. Now we have a strong push above EMA, and look how we're pushing higher. So what I need to do if I want to stay on the right side of the market, I need to draw my shortened trend line. So we have a shortened trend line like this, and notice how nicely price is fitting inside of it. So downtrend had a break, couple small legs to a new extreme, indicating that this downtrend is over. Strong push above EMA, indicating bullish momentum. And as I'm seeing right now, I expect to get a second entry long, but I already have a break and a new high this quickly. Price didn't even pull back a little bit to the exponential moving average to offer me a second entry long. That would be a high priority setup. And now look what you have again, a second leg to a new extreme. So my uptrend already has a break and a new extreme. And notice what it looks like. EMA is flat and we're swinging up and down, up and down, up and down. So I'm not going to force any long entry after price creates a break and a new extreme. We have a strong push below EMA. We have a first entry long, but right now what's going through my mind, since uptrend played out in such a big bearish bar, I want to see a failed second entry long below exponential moving average. I don't think lower high would be just enough, but look what you have. You have a first entry long that is working. You're going to pull back second entry long, but it's far away from EMA, and the uptrend had a break and a new extreme. So I cannot go long here. Even though this looks tempting, I need to wait. This is a range-like structure, and I'm focusing on the short-term trend lines. And look what you get. You would have gotten trapped here. This is a failed second entry long, but it's above EMA, and it's a little bit not too clear to go short at this point on. So at this point on, I'm just sitting and waiting patiently. And notice what we have. We have a strong bearish push lower. So once again, I have to redraw my downtrend, and notice how the trend lines are working perfectly. Short-term uptrend, break new high. Short-term downtrend, break new low. Short-term uptrend, break new high. Notice here, the reason why these trend lines are wider, because here you get extra swing that will allow you to draw a trend line slightly wider. Here, as you're pushing above EMA, you don't get no extra swing around here that would make you to draw a trend line wider. For that reason, you're sticking to the very tight trend line here, and here you can slightly extend it, because right around the EMA, you get a second swing that helps you to form a slightly wider trend line. All right, so this is how you're basically drawing these trend lines. Now, notice what is happening. I'm just going to zoom out a little bit. I can see this is a trading range structure, and this is the highest high. This high is lower. This high is lower. This high is lower, and it's overall starting to feel like we may have a potentially bearish imbalance because price is failing to reach the upper side of this trading range. The resistance is not being reached. But right now I have a short-term downtrend working in play, and I need to respect it. Notice what I have. I have a break, new low form. Am I fading the breakout here? Even though we are at the bottom of the trading range, at the strong important key level, the low of the day, I'm not fading the breakout just yet. First, we can have two legs to a new extreme, and second, we have a bearish imbalance. Each new low is lower than the previous one. Okay, you can draw a trend line to get the visual for bearish imbalance, but you guys can see this trend line is not valid. It's too wide for a trading range, and you have static lows. So if you have lower highs but static lows, this is showing you a trading range structure with a bearish imbalance. So I'm not really going long just yet. You guys can see two legs down, perfect price action. After you have a two legs to a new extreme, price is indicating to you according to rules that this downtrend is over. So right now, I'm not thinking about selling at all. I'm just waiting patiently. I have a first entry short, pull back, second entry short, but I know the downtrend already played out, so I cannot go short here. So I'm being patient, and notice what you have. First entry short, second entry short failure. One tick trigger lower, instant reversal up, strong bullish move up. This is a failed second entry short high probability setup. After downtrend played out, this is a reversal pattern. So this is a high probability setup. Now I didn't take this trade because I was still being patient here because it looked a little bit too stacked. But looking back, I should have, because it was such a strong bullish bar, such a nice trap. Great high probability entry right here. I'm going to draw my short-term trend line because we're coming from the failed breakout. So I'm not going to make it tight like this. I expect reversal, so I'm going to make it wider. Notice what you have. You have a break of a trend line, new extreme form. So from this point on, when I'm watching this, I'm anticipating short setups. I'm combining once again bearish imbalance with the fact that we already have a break and a new high. The fact that we have a break and a new high this quickly is telling me that there may be the strong bearish imbalance, and I'm not looking to take this long. In fact, I'm looking to go short. I have a lower high, but I want to be a little bit sure we still close at the EMA level. I want to see a real failure of the second entry long. You guys can see I have a first entry long, pull back, second entry long, failure. This was my first trade for the day. Uptrend played out with the break and new extreme. Short-term trend lines are working perfectly in this trading range. So great bearish signal bar. I took this entry right here, scalped out, stalled a little bit, but eventually pushed lower. It is a little bit aggressive because you didn't close perfectly below EMA. It was so close. It looked like it's going to close below EMA at the last second. There was one tick push higher, but I still like the context, combining the bearish imbalance with the fact that uptrend played out, second entry long failure. I expect for price to push lower. And notice what you have. You have a lower high, confirmation of a failed second entry long. Normally that's a great high probability setup, but in this instance, it already got too stacked and EMA is too flat in the middle of these bars. Also, we get a breakout pullback pattern of this congestion, breakout pullback. So decent short again, not a bad entry at all. You know what? I can actually mark this entry right here because I like the fact how you got nicely out of that congestion breakout pullback pattern now, the form of a lower high. Price created a micro double bottom and strongly pushed above EMA. So I'm going to draw my trend line again because I want to stay on the right side of the market. So far, these trend lines are working perfectly in this market. I forgot to draw. I was watching a trend line like this. So I have a first break of a trend line, so I expect to get new low. This is why I don't want to go long at all. Now that we have a double bottom, and this key level right now is still proving that it's holding again. Because once we have a bearish imbalance here, you expect for breakout eventually work, but it didn't work. Breakout failed and price strongly pushed higher. And now that I have a new low, and I have a first entry short, strong push above EMA indicating bullish momentum, I can expect to get the same pattern right here, failed second entry short, reversal pattern. Let's see what you get. First entry short, second entry short, failure off the EMA, off the trend line, high probability setup, failed second entry short. And notice what would have happened. You guys can see I'm going to draw my trend line slightly tighter. And as the price action is moving along, you're going to keep adjusting these trend lines as they keep progressing. So you can clearly see how price action is working. There's a very minimal overshoot. Now, I'm just going to zoom out and I can see that the key level overnight is holding for the day. So I'm going to use the trading range structure as the target. We're going to reach this resistance. We're coming strongly from the failed breakout. This uptrend is in play. And notice this is all you have to follow in these trading ranges. Just these short and tight trend lines. And once you have a break in new extreme, don't try to extend too quickly. Just be patient and follow these trend lines. I have to draw the trend line against the direction of a major trend. I have a new high, first entry long, pull back, second entry long. I'm anticipating to take second entry long, but it needs to close closer to EMA. Downtrend is in play. Signal bar is not the greatest. So even though it's the first break of a trend line and I expect to get new extreme, I cannot go long here. It's not fully at the EMA. I was expecting to get a double trap here personally, never form right here. Then you can have a break, another new extreme, break another new extreme, and break another new extreme. So right now I have an uptrend that has multiple legs to new extreme. When I was watching this, I was tempting to look for shorts. Once price was pushing lower like this, I'm thinking that I may get failed second entry long, but this changed the bias here. Once you see such a strong bullish momentum, this made me think about the structure. I have a trend line with 1, 2, 3, 4 legs to a new extreme. So there's possibly going to be a bigger pattern. So what I did extend the trend line like this only after we got this strong bullish bounce. Because if the uptrend has a break and multiplex to a new extreme, strong push below EMA is supposed to close below EMA and you're supposed to get a reversal pattern. The fact that you didn't, you push back above EMA, confirmed that if you have multiplex to a new extreme, there's probably a bigger pattern. And overall, this move up was quite strong. This is not one of those super tight trend lines like this. So this was a quite strong rally. So it's natural that eventually if the rally is super strong, you may get a slightly wider channel. And price created a break and a new extreme. And notice how this break is clear and clear new extreme. This is a wide break and wide new extreme. It is a clear new extreme. Right here you have a small break and these new extremes are still very steep. It still looks like it's part of the trend. Same thing right here. You have downtrend working lower, break, new low, and then you have another big break, another big move to a new low that you cannot ignore. All right, so now I definitely know that I have a break in new extreme, and now I don't want to make the trend line wider. I can afford to make the trend line wider once you get these very steep, tiny legs to a new extreme that still feels like it's part of the one trend. But once you get a clear move like this and clear break like this that breaks the trend line, you don't want to be making the trend line wider. Now, I can see that the price is turning consistently here. So what I can do, I can copy it and I can put my level at here because right now this is looking like a trading range. The main trading range moves slightly lower. You guys can see price is coming from these lows back to these highs. So this is a trading range structure and I expect to buy low, sell high. So right now that we have a break and a new extreme and we have a strong push below exponential moving average confirming the bearish momentum, what is according to rules my expectation to get a failed second entry long? New high formed, first entry long, failure, and price is creating failed second entry long right here. But this is a horrible signal bar and it's far away from EMA, so I cannot take this entry right here. So I need to be patient. If I don't get it set up, I need to be patient. I'm just sitting on my hands right now. Okay, I have a new low, first entry short, pull back, second entry short. Let me just pull it back a little bit. When I'm watching this, today, perfect price action. I'm drawing wide channel because I expect reversal. Downtrend is in play. First break, I expect according to trend line rules to get the new extreme. Two-legged pullback up. First leg, pullback, second leg, second entry short at the exponential moving average at the key entry point with the direction of a trend coming from range highs all the way down to range lows is a high probability setup. But notice what my signal bar is. Horrible bullish signal bar. I cannot go short here. And by the time the scalp was already made. So this would have been a great entry. I'm almost tempted to mark it. I should have entered this as a double trap, meaning I should have waited for this bar to finish, drop a limit order further back, and put my stop loss above here. Because the bars, even though they may look big, the volatility slowed down a lot, so the stops are really not that big. So this is how you can handle it, use it as a double bar entry. But it's a textbook two-legged pullback, break, new high form of the uptrend telling you that the uptrend played out. You're safe to go short. You're with the direction of a trend. Simple price action doesn't get easier than this. I don't like lower high because it looks like you have a new low, and I don't even like taking the failed second entry long here because once I get a break and a new low, I'm a little bit hesitant. So I'm personally waiting here. You're coming from the range highs all the way down to range lows, so you can draw a bigger pattern. You can expect to go all the way down here. So I just prefer to be a little bit patient here. And as the price is pushing lower like this is telling me that we're probably coming from the range highs all the way down here. Okay, the range is coming into effect, range rules, so I can afford to draw my trend line now slightly wider like this. Now, this is my trend line. I'm just going to quickly delete this. This is my trend line working lower. Bias is bearish. EMA is pointing down. Notice what it's doing. Price is confirming the trend line right here. All right, so my bias is being confirmed. So I'm sticking still with the bearish bias. I'm not overcomplicating it. First entry short, counting from this low. I'm going to draw my shortened trend line. I'm doing the same thing here as I'm doing here. I'm waiting for high probability setup. First break of this downtrend. First entry short, pull back. Second entry short. An absolutely gorgeous high probability second entry short. It doesn't get cleaner and easier than this. Why? Uptrend played out with the break and new high, indicating that the buyers are no longer in control. It is at the key entry point. Exponential moving average keeps holding price. Great signal bar. If downtrend has a first break, I expect to get new extreme. Textbook price action. Notice all of these high probability setups are variation of the two-legged pullbacks that are with the direction of a trend or failed two-legged pullbacks that are against the trend. And you can stay on the right side of the market just using these simple trend lines. And what a gorgeous high probability setup this was. Break, new low form. So now what I see that the price may correct or reverse. I'm not really at this point on looking for shorts. So what I'm going to do, once again, you guys see me doing this over and over again, drawing my trend line, new high form, first entry long, pull back, second entry long. We actually skipped it a little bit. You already see the outcome. After you have a break and new low, support the overnight low for the day key level is holding price. Simple price action from trading range. I expect for price to go now from here to here again. Strong push above EMA confirming the bullish momentum. New high, first entry long, second entry long. Great high probability setup. I missed this entry. Can I go long above this bar right here? It's a horrible bar. I went long above this bar, but I put the limit order at the close and price already reached the scalp. So never really filled me back. I was about to really risk it even though the stop loss was quite big. But the context wise, this is a perfect entry. Uptrend needed a new high. Downtrend played out, strong push above EMA, key entry point is holding price, second entry long, high probability setup, and you're coming from the range lows to the range high. So perfect price action. Price created a break, new extreme. All right, first leg up, pull back, second leg up. Strong bearish push below EMA. What am I anticipating? Take a look at this pattern and take a look at this pattern. I'm anticipating this to happen. I have a similar scenario, break new high, and I want to get a failed second entry long. I have a break new high and I want to get failed second entry long. Right now, I just have lower high. So I want to see reversal pattern, first entry long, pull back, second entry long, but it formed like this. No trigger below this bearish bar. I can go short below here, but by this time, it's too congested. It's too stacked. EMA in the middle of these bars, I cannot pull trigger here. Even though eventually it worked for a scalp, you can't risk it. Anything can happen at this point on. This is not following the rules. Once I get too congested, I cannot enter. But you guys can see downtrend has a break new low. First leg to a new extreme, pullback, kind of like a second leg to a new extreme after this consolidation. Uptrend played out. And right now, since price is consolidating, my hands are off the keyboard and off the mouse because I don't want to get trapped. I'm just sitting here patiently waiting for price to do anything. You guys can see we keep going sideways. It's unclear here, and this is the area on the chart where it's completely okay to be unclear. We have a strong bullish rally up. I wasn't really sure what to do here because it looked like a trading range. I even thought that we may potentially push lower, so we eventually pushed higher. So I don't still see any decent entry because this is the first entry short or first entry long. As the price keeps pushing higher consistently, this tiny little uptrend is not proportionate to these multiple new extremes and to this entire uptrend. So I need to draw my trend line slightly wider like this. Notice how nicely it fits the price. It got confirmed right here, got confirmed right here. As I see this price pushing higher, that's none of my business because that's not high probability setup. I want to see price to pull back to key entry point, and it needs to be a two-legged pullback. Just because price is running up higher, I cannot have fear of missing out because these are just the first entries and it could have easily just trapped you in reverse the next time you try to enter this. So just be patient. Notice what you have. Small break, new extreme for the uptrend, indicating that uptrend is over. You're at the range highs of the trading range, and strong push below EMA confirming the bearish momentum. Basically, repeat pattern of this right here. So I expect for price to give me failed second entry long, new high, first entry long, pullback, second entry long, failure. Going to my trend line wider like this because I expect reversal. I'm not expecting a correction. Not only this is a new high, first entry long, pullback, second entry long, failure. At the same time, this is a new low, first entry short, second entry short. This was my second trade for the day. Great high probability setup. Two high probability setups in one. Second entry short, failed second entry long. Notice how close we are below EMA. This is a great bearish signal bar. Uptrend played out coming from range highs. Great high probability setup. You even get a lower high confirmation of failed second entry long and the second entry short. I just don't like this big stim at the bottom. If you don't have the stim right here, if this was just a nice bar, this lower high would have been great. But with this stim right here, I don't think this is just worth risking because you have to go short at this low after such a stim. There are going to be better entries. Notice what you have. First entry short, second entry short. At this point on, I adjusted my trend line slightly to make it a little bit wider because you're figuring that you're most likely going to go from here all the way down to here again. But just like here, after I had the break new low, I wasn't really keen on going short. I don't want to go short after I have a break and new low. So you guys can see this time it failed. Notice, this time it worked, the failed second entry long, but this time, this little lower high would have failed. And this is why we pay respect to these short-term trend lines. You only want to jump on board to sell after the downtrend gets confirmed. So when I'm watching this, downtrend played out with a break in new extreme, strong push above EMA indicating bullish momentum. You have a second entry short, but you know you don't want to go short after downtrend played out and you pushed above EMA. In fact, you have first entry short, second entry short failure. We have slightly aggressive failed second entry short reversal pattern. This is such a great signal bar. EMA is holding price and you trap them good. So good for a scalp, but you have to be careful here because you're coming from the range highs and that's the bigger pattern. You may eventually go all the way down to here. So a little bit aggressive. You guys can see price eventually push lower. And this is where it's starting to be a little bit confusing. I was even playing a channel like this, but I wasn't never really too sure about this pattern because notice how wide this looks. This is looking like a trading range to me. Something like this or potentially this, and you keep pushing lower, you keep making lower highs and lower lows. At the same time, it's too wide and this downtrend is too wide for range structure. You guys can see how all these channels are fairly tight and this is such a wide pattern suddenly. So this was quite confusing. I didn't really read it properly here. Fortunately, there's no high probability setup that I would see to enter. So as price kept pushing higher like this, I deleted this downtrend. It is truly just trading range structure, shorten break, new low, and price really was in the middle of no man's land. So you have to respect the price when it's in the middle of no man's land and you don't want to be forcing entries. Don't forget to draw the short-term trend lines, First break, first entry long, pull back, second entry long. Now, first break for the uptrend, and according to rules, uptrend needs to get new extreme. First entry long, second entry long. It is at the EMA, but it is after such a big bearish bar. This was so tempting to go long here, and you never got triggered. Instead, you got the push below EMA like this. At first, I wanted to go long here on a second entry long, because uptrend is new high. This was such a strong push. As price pushed lower here, I thought, okay, this is quite a strong bearish momentum, so we may potentially get a failed second entry long, because right now this is quite strong. And then a big bullish bar formed back above EMA, confirming the first initial analysis that you want to go long. So this is a good second entry long to take. I didn't really react quickly, or just didn't change the bias quickly, because I've been changing the bias here 3 times. First, second entry long, then to go fill second entry long, and to take the second entry long again. So I just stayed on my hands. They just make it a little bit tricky because it stalled. It didn't trigger at first here, then it made this bearish bar, and then it triggered. But according to rules, this makes sense. Two-legged pullback down, EMA is holding price, big bullish uptrend. You need new extreme, first break of a downtrend, first break of an uptrend. Price action is working perfectly here. We're pushing higher. I'm going to draw a slightly wider channel. You guys can see we keep pushing higher, we keep pushing. We have a new high, first entry long, pullback, second entry long. Now, I've received a question about this trade right here, why this failed. This is just a little nuanced trade that by this time EMA is in the middle of these bars. You're working sideways for 20 bars. This is entire consolidation structure. Also, you have first leg, pullback, second leg, two-legged measured move. You're coming from the failed breakout because you broke the trading range, you broke higher. You're probably pulling back after you reach the measured move, and you broke above the trading range in a consolidating structure. This is why you have to stay away from the second entry long. However, if you're a beginner trader, it's really hard to get the feeling that something feels odd about this trade, because from this perspective, it looks like a two-legged pullback at the EMA off the trend line. So if you took this trade, you didn't do much wrong, because you really need experience here to get burned a lot of times on these ones to really remember that something was wrong here. But notice two-legged pullback up, measured move, failed breakout, consolidation, EMA in these bars. Not the greatest entry, but I can definitely see the reasons why you took it. Now you guys can see this is a small little consolidation. How you trade these consolidations, most breakouts of consolidations will fail, and you're fading the breakout with the direction of a trend. Trend is up, consolidation, break lower, push above EMA, horrible signal bar, otherwise it would have been green entry. Then price form a first entry long, pullback, second entry long. But at this point on, we have a break and a new high. So I don't want to go long. In fact, I'm thinking I want to go short, but we have a failed second entry long, but we don't get a trigger below this bearish bar. And then we have an inside bar that stalled again. And on a failure, lately we've been noticing that if you don't get a trigger right away on a trap, that means that the momentum is there and it's probably not trapped. So now you don't want to go short. It's still at the level of EMA, it's stalled a little bit. So I don't really see any decent entry right here. Not really. New low, first entry short, second entry short. Not a bad entry, but still feels a little bit too high. I don't want to be chasing market like that after I have a first leg to a new extreme pullback, second leg to a new extreme, or about to form a second leg to a new extreme. I'm not really sure, and I definitely don't want to take a long all the way up to here. Break, new first entry long, second entry long. You guys can see we are at the major trading range right here, key level of the day. So you guys can see what can happen. This is the major trading range. You would have barely scalped out, but I don't recommend going long here after two-legged pullback up at the major key level. Strong push below EMA indicating the bearish momentum. Lower high setup, confirmation of a failed second entry long, confirmation of a failed breakout. I'm drawing my trend line wider like this. First break of uptrend, break, new high, downtrend needs to get new extreme, second entry short, first entry short, second entry short bullish bar. You would have had to ride this out, but your stop loss goes one tick above the signal bar. You would have eventually got out of this trade. Price consolidated. You guys can see how perfect price action. This little failed breakout higher, fading the breakout. You're coming off the range highs. Breakout to the upside, fading it. Price pushing lower, creating a new extreme here. I'm gonna make it a little bit bigger. Strong spike up, and this allows me to draw a spike and a channel pattern, because you can see that this is a strong spike and you're kind of struggling to find a wider pattern that will really fit. This is how you generally know there's a spike and a channel pattern, when you're struggling to find the decent pattern, because you don't get no confirmation here and you keep extending it. So after such a spike, you get a spike and a channel pattern. First entry short, pullback, second entry short. However, it's not at the EMA. Even though it worked, you have to skip this. Then you get a double trap entry, first entry short, second entry short, failed, and a failed second entry short fell again. So great high probability setup at the exponential moving average. You need to get new extreme of the spike and a channel pattern, and I believe we are getting very close to market close. Yes, we are. So this was the bigger picture. You guys can see we've been basically trading for the most part in this trading range. Eventually the bigger key level came into play right here, the overnight high. Price action today worked perfectly. All of these trend lines are getting break new extreme. A lot of textbook two-legged pullbacks, volatility slowed down, and it's amazing feeling to be trading price action like this, where we don't have 8 or 9 point stop losses. We don't have these spikes in volatility, the horrible signal bars. Today was much more relaxed, calm, and it was much easier to make decisions. So this is what price action trading is about, and hopefully we will get more a normal day like this. So I hope you guys were able to capitalize on a day like this, and a day like this really makes you appreciate the job as a trader. So I'm going to see you guys in the next one. Take care, everybody.